So if you've been searching for a home and have been out there on the house hunt, at some point during your journey, you're probably getting hit with some FOMO or feeling a sense that you missed the boat because you didn't take advantage of the 3% rates from years ago, or even were around when there was that brief period of time when they got into the 2s. Certainly normal to feel this way, and there's a lot of people who brag about the situations that they're in with the homes that they bought at those record low interest rates, but I'm here to share with you today that you did not in fact miss a boat. In actuality, there are always other boats that are leaving the dock, but in this case, you might actually be in a better position than your friends were who locked in those very low rates. Sure, it's very easy to feel that way because when you look at a 2 or a 3% rate handle that's attached to a mortgage compared to where they're at now, something with a 7, potentially even an 8 in front of it, it's very natural to have that anxiety of feeling like you really did miss out on that opportunity. But here's the thing, an interest rate alone has absolutely no bearing on whether or not you missed the boat. There are a ton of other factors that are actually at play when it comes to buying a home. And like I said, you're probably in a better spot than your friends were if you're looking to buy now in this higher rate, high price environment. So let me explain why. My name is Arjun Dhingra. I'm a top mortgage banker nationally that's based here in California, a 2-time Taekwondo world champion, former coach for Team USA, founder of the LFG Energy Society, a husband and father to 2 gorgeous little girls. And I'm extremely passionate about putting forward a financial literacy voice out there in our marketplace today so that people make better decisions when taking out mortgage debt. So over the last couple of years, particularly in this higher rate environment of the last 18 months, I've been working with hundreds of buyers around the country, and all of them are still engaged in looking for their homes, especially those obviously who haven't found theirs. Many did, but for those that are out there still looking, the interest rates are not scaring them. And the reason for that is because they see the opportunity that higher interest rates bring. The first point in all of this is that missing the boat is simply an illusion. When you look at those rates, it's very easy to think that you maybe did miss out. But in fact, what actually came with those lower rates? Because so many people associate low mortgage rates with a healthy housing market, when in actuality, it's very much the opposite. Those low rates actually led to and resided over a savagely unhealthy housing market where people were having to overpay for homes, or homes were selling in a matter of minutes instead of days, weeks, or even months, which is totally normal. So the question to ask some of these people, or even yourself, is, hey, even though my friend got a really good rate, did they have to pay $50,000, $75,000, $100,000, maybe several $100,000 over the asking price just to get the home? And when you stop and think about it that way, you stop feeling so bad about yourself. Clients I have that bought in some of the higher priced areas of Northern California had to overpay in some cases by close to $500,000 for a home. Now, because of this bandwagoning effect, or during COVID, they really wanted the space, or they were willing to do anything to get out of the city and move to an area where they could have a yard and a garage and more space, a home office, a home gym, that they were actually rationalizing to themselves that overpaying by this amount, $500,000, was actually going to be worthwhile. The difficult thing in all of that is that did not actually pan out, because many of these buyers, or now current homeowners, have actually had their homes appraised and the valuation's just not there. So they clearly overpaid. Now, if you're gonna stay in a home for the long term, the price is the price. Whatever you ended up paying ultimately is secondary to the fact that you're gonna be there for the long term and that the home will eventually appreciate and be worth far more than what you paid, whether you overpaid or not. But for most people, in the current market that we're in now, overpaying for a home simply because low interest rates were driving so many more buyers into the market is not necessarily an advantageous thing. So let that sink in for a second, and just know and rest at ease that if you're still out there looking to buy, you haven't truly missed anything. Ultimately, we have to look at the big picture, because a low rate is only one small component, or the interest rate in general, of an entire deal. So the second point, guys, and guess what? This is actually the most important, but you are in fact in a much better position than where your friends were who bought earlier. And that is because you are now operating from a position of strength to be able to negotiate better terms, closing cost credits potentially, a lower sales price, credits towards repairs on the home, even a longer escrow period if you need it, because sellers actually now have to entertain, and here's a key word, negotiate, which is something that was not allowed in the last few years of this crazy market, in order to get a deal done. So knowing now that you can operate from this position of strength and have it really work to your advantage, you can realize now that you're actually actually in a big position to save. Save big not only in the way of credits, potentially on price, but the terms of the actual deal, because so many buyers out there right now have been able to negotiate enough of a seller credit in order to actually buy down their interest rate to where they could get what was being offered, say 18 or 24 months ago. So now it's a true win-win when you put yourself in that scenario. Even if you aren't in position to negotiate a seller credit that's large enough to do some form of a 2-1 buy down or a 3-2-1 buy down, or even a permanent buy down, you still have the opportunity to refinance. And that is precisely why you shouldn't be worried about these higher rates. If you're focused on the deal itself and any sort of concessions or things that you can get to sweeten the deal, and the affordability, which is perhaps most important, the monthly affordability of that payment, the rate becomes secondary because mortgage rates go up and mortgage rates come down, and they are not expected to stay up in the range that we're in right now for very long. So at some point in the near future, you will have the opportunity, as inflation cools off and mortgage rates follow suit, to be able to restructure your debt. The good thing about that is, when rates come down, not only are you able to refinance, but more buyers come back into the market, which means the bidding frenzy and all the chaos that was part of the last few years starts to re-ensue again. And what does that do to home valuations? It pushes them up. And if you own a home, this means more equity. So even if rates do come down, and they will likely not ever be at the historic lows that we've witnessed during those COVID years. So if you have these dreams or illusions of ending up with a rate just like your friend have, it's probably not going to happen in the end, but you will get close. It's very likely that we will see rates that'll get back into the 5s, if not the 4s potentially, with some buy down options. And to be quite honest, given where inflation is, the overall economy, and how far back we will have come from the highs of nearly hitting 8%, this is going to be a huge win for homeowners. So the point in all this is, don't get frustrated by the high rate environment that's out there. Focus on the actual deal and all the opportunities that those higher rates bring you. You didn't miss any boat at all. Like I said at the beginning of this video, there are always more boats that are leaving the station, or the dock, as I should say, appropriately. So you will still be able to take advantage of many opportunities out there in today's market because of that. So here are a few pro tips for you guys. First, put together a very good team. Lender that's creative and an agent that isn't afraid to negotiate. Either of those two are not part of your equation, make sure you fire or replace one or both of them. Definitely go into almost every deal with the approach that you want to ask the seller, once you've hit an agreed upon price, for some form of a credit to either help you offset closing costs or be used to buy down your interest rate. Lastly, in working with your creative lender, figure out ways to use whatever sort of credit that you are able to negotiate to maximize the overall mortgage value of that credit. So if you found this helpful, chances are you're still watching it, which means you're part of the 95% who have not yet subscribed to my YouTube channel. So let's make a gentleman's agreement on. If you got any value out of this video, or if it helped you think about the market in a little bit of a different way, or kind of calm that anxiety that you didn't in fact miss any boat, then please hit the subscribe button and the like for this video so that we can share this content and reach more people. Our goal is to reach 80% of viewers who are not subscribed, and the bigger this channel gets, the better the content goes. So in closing, the reality is that rates go up, rates go down. So rather than fixating on trying to find the right rate or perfect rate, focus more on getting the right home, because homes are permanent. Interest rates are very temporary. Nobody ever keeps a rate long enough to realize whether it was truly high or low. Refinance opportunities come many times during the duration that you live in a home. So again, focus on the affordability and all of the right aspects of that home that you will want to live in. So don't feel bummed about missing the boat because you didn't. If you didn't buy in the last couple of years, you actually may have lucked out, and chances are you're gonna get a much better deal in this higher rate environment than your friends did back a few years ago. So keeping all of that in mind, now is a great time to buy if you're serious about entering the market. It's not for everyone, but for those of you that do want a home, this is a great time to actually be engaged for all of the reasons I've explained in this video. I hope this helps, and I'll see you guys on the next one.